I recently had a conversation with the great and powerful Crossroads, an amazing X account. His name's Roy. But essentially, we decided to do a creative video here where we spoke about different companies that we're looking at or deep diving into that potentially we think have potential opportunity in our portfolios. Companies like Robinhood, Nubank, or even PayPal. But there's not much more of an explanation than that. You can check out his X account right there, but please enjoy the video. We're going to jump into each individual stock, give it 20 minutes each. These are stocks that me and you have been very interested in really recently. And so why don't we start with Robinhood and then we can go on to some other fun ones after that. But yeah, Robinhood, are you a shareholder of this company?
I am. Well, I just full disclaimer, I own Leaps. So this I've always seen as a trade. I see things setting up in 2024 uniquely as a golden confluence between, I call it the ICE confluence. So interest rates remaining higher for longer. They benefit from cash sweeps. And of course, you have the crypto, which is, what that's doing right now, and then equities. So they make revenue from all of those, and they're just rarely will all fire on all cylinders, but that's the time. So, but I've started been thinking about it from a long-term perspective. It looks attractive there too. So I don't know what I'm going to do just yet, but right now just Leaps. What about you?
I mean, I don't have a position in Robinhood just yet, but am very intrigued. It's just continuously pushing higher. And honestly, I can see it getting into the 20s. But I don't know if the risk reward there is for me. If, for example, crypto ends up turning around. But yeah, I'm very, very interested because I think, one, I do believe that crypto is going to continue to go higher. They are seemingly having a good hold on that versus much bigger players like Coinbase. They continuously show off that for smaller transactions, like under the $10,000 trades, that they are actually a cheaper alternative to Coinbase. And so if they can continue to show off that they are the better bang for your buck, coupling that with potentially 5% interest rates just for $5 a month. They're coming out with a credit card soon at the end of March. They now have retirement accounts. So, since the last frenzy of trading that happened in all the way up till November of 2021, they've just been building.
Yeah.
And so now we're going into another potential round of bullish frenzy trading and these sorts of things with potentially options plays, and whether that's good or bad for retail investors, it's good for Robinhood, right? They're not making money based on other people making money. They're making money based on people making bets.
And they do, from legit like non-degen plays as well, but that is their bread and butter. The more volatile, chaotic, up and down the market is, and you look at what Bitcoin has been doing this last over the last few weeks, really, but especially this week, all-time high, bam, down $5,000, and just rinse, repeat. And you look at the altcoins, what they're doing, it's just. And equity market's the same thing. You look at Nvidia, and overnight trading is a big thing. That's one of the interesting metrics that came out. There's of course this Morgan Stanley discussion that Robinhood was in on, and they mentioned that within by when they launched Robinhood 24 hours, I don't remember the exact date, but it was maybe 6 months ago. It wasn't a full year ago. They have 10 billion in total volume that was traded, and on their busiest day, so it's not every day. 25% of their whole volume each day is traded in that overnight period. And I'm thinking that it's, a lot of it's after that long weekend that people are just itching to get back in and change some positions and buy some things before other people get in. When Robinhood launches 24-hour product, people are like, oh, who's going to actually use it? I've not used it. I still pull it up, and track where things are, even though it's meaningless. It's interesting. It's fun. But there's apparently a significant number of people, maybe even I don't know, that are just like, hey, I have this time right now. This is my slot. I'm going to go ahead and buy or put in my order. So whatever it is. And it's just ridiculous how high. So February, this is another statistic that came out, is that had the highest average of daily trading volume for the overnight session of any month since launch. And it was 1.6 higher than January, 2 times higher than December, and 2.6 times higher than November. And part of that was, of course, just them actually making more and more stocks available. There's some like SoFi that was available for a little while, and they're like, actually, never mind. And we don't know why for sure. Maybe just not enough volume. But the last little statistic on this is the single biggest trading day in terms of overnight volume was March 3rd in the morning of March 4th. So things are not It's not like just kind of stabilizing and going down or remaining flat. No, the overnight volume, and they make money off of this payment for order flow and a couple other things. There's a small fee there too. But they're killing it. So yeah.
What do you think about their gold memberships? So this is something a little bit different, in my opinion, where instead of actually charging an account fee like regular banks would, they make the offer so good that they say, "Hey, do you want to pay an account fee, and we'll make great products for you?" And they actually just changed their regular interest rate in their accounts from, I think it was 1.5% before without gold to 0.01% to incentivize the difference between making that $5 commitment.
Yeah,
Do you
let me
think that
share
this
it.
is going to play a large role?
Yeah, let me share a screen there. So this is gold subscribers, and you can just see, since quarter 4 when they launched it in 2022, it's continued to increase, and that rate of increase is not declining. Of course, they incentivize it. People that are doing the gold membership, oftentimes it's for that extra added interest rate that they get on their retirement funds when they transfer them over, or even on their cash that's there for the cash sweeps. But it's a pretty interesting product. I'm not using it just because my Robinhood portfolio is very small. It's my like third largest portfolio of 3, so it's a nothing burger right now. But I'm thinking of transferring actually over. Just they make it so it's very viable. They have nice matching, and it's done so well. Yeah, no, this is meaningful because every single month these people are paying $5 a month, and so the gold adoption rate you can see there. That's probably the most interesting thing is it went from 5% now to 6.1%
Yeah.
and increasing. And we don't have the numbers, of course, yet for quarter 1, but every indication is that they will continue to do well here. So, but this is, you could just imagine if they get up to like 2 million, times $5 every single month. So we're looking at $120 million. Did I do the math? 224. Yeah, 120 million throughout the entire year. That is a meaningful amount of revenue for Robinhood. So it gives them that stability as well, that I'm sure that, if there's a bear market down the road, that people drop off as far as gold membership, but many of them will just get used to this product, the features, and just say, hey, it's just $5 a month, just a cup of coffee, actually less because of inflation. Why not just stick with it? So
The example that I always use is it really feels like similarly and priced the same as a Costco membership, right?
actually, yeah.
Of just, hey, you know what? We will offer this to get such a better product on the other end. But not only that, because people are being charged that they want to use those services more and more. Amazon Prime, another great example. Like there are some heavy users that end up actually making it kind of a loss in Amazon's sake or potentially even Costco's sake. But on the side of Robinhood, it really might not fall into the heaviest users might still not even be losses at all, because
Yeah.
even if you put in $10 million to get your 5% out on the other end, you're still going to end up making Robinhood money based on the cash sweep.
Yeah.
So
That's the amazing thing is they'll either win a little or they'll win big. So it's like, all right, that's pretty
yeah.
safe and amazing. So
Yeah, it's super interesting. So another thing that gets me really excited about Robinhood is the international expansion.
mhm.
They just recently broke out into the UK, into Europe for a lot of their crypto services as well. What do you think, or how much of impact does this make on the stock for you? Do you really like if they don't internationally expand to multiple countries that this changes your thesis, or what do you think?
So I've done some digging. I haven't written an article yet on this. So I I'm optimistic. It's really helpful for the narrative. The narrative does push the stock. It's not so like if you look since November, like they just basically move with crypto, even more correlated than miners. So even though if you look at the revenue, it's a small piece of the pie. But as far as UK expansion, it's still a wait list for a lot of people. They're starting to get actually on Robinhood, but the UK is a little bit different environment. So there's two pieces here. One is Robinhood years ago actually tried to expand in the UK, and they ended up pulling back and not doing it. And they tried to do something similar in Australia, and they pulled back and they ended up not doing that. So there's
Hmm.
a lot of regulation, red tape, and just some very different features. So Are you very familiar with like UK investing style and just the different nuances there?
No, not really. Aside from the payment for order flow problems there.
Yeah, yeah. So payment for order flow, in I might have this backwards, but it's either banned already in the EU and it will be banned in the UK, or vice versa. But
Hmm.
either way, that's just not going to be a viable vehicle for Robinhood, and so they're not even getting payment for order flow from the UK, and they're offering still free trading, and they do have like a very small fee there, but it's not payment for order flow. So it's kind of a test and proof of concept to see if Robinhood will actually work. A lot of it's going to be coming through the value added products and buying and selling options and crypto as well. But there's the main vehicle that most people that are not super wealthy, and I don't know everything about it, is through ISAs that the UK has. These are tax-free accounts. From what I understand, they're a lot like the IRAs for the United States. And Robinhood does not offer those right now. There's comments that they're working on those. They're looking at doing that. We don't know when they're going to be rolling out, but I've heard from many people that are in the UK that they're like, hey, there's no real reason to use Robinhood if we don't have the ISAs. Because I mean, if you have a choice between the two of like, hey, tax-free capital gains versus the large ones, you're going to pick tax-free every single time. So even as good as the user interface is, it can't really overcome that because people hate taxes.
I also heard that the options weren't rolled out just yet. It's
That's
just
the other feature too. Is
equities,
I
right?
thought that they were going to maybe hit the ground running with the options. They did not. U.S. stocks only at this point as well, and then you're using the U.S. dollar, not the British pound. So there's a little bit of a conversion there. So and then SIPs. That's another vehicle that people typically invest in, and Robinhood doesn't have that either. All of these are being worked on. We don't have a timeline for them. So it feels like this is kind of a beta test, honestly, at this point, where they're like, hey, you can try out our platform, get familiar with the user interface, put in $100, just play with it. People will not take it seriously unless they have, especially the ISAs. I think even just with the ISAs and without options, it would still be attractive, but they really need both, and that's where they can compete well. So I think that they will, do well with the UK expansion. The other thing is as far as percentage of people, UK public, I don't have these numbers handy, but there's a lot fewer people in the UK that invest for whatever
Oh,
reason.
I
I
see.
mean, they have more pensions there is one of the factors. I don't know where they're at, like with Social Security type things, but it's just it's continued to go down like every single year. I think it had a slight bump during COVID, but it's much, much smaller than the United States. So Robinhood might be able to change that with ease of access, with the no fees and everything like that, but it's just going to take time. So as far as actual impact to the bottom line and then the monthly active users, I don't think it's going to make much of a difference this year. And I'm mostly focused on this year for Robinhood. But in the future, if they nail the UK and I think that they have a much better user interface and features than anything that's over there, as long as they have the ISAs and options, then there's no reason why they can't go into the EU. And there's a large, large market of people there and continue to expand overseas internationally. But it's going to take a little while. So not overnight.
So another question I have. So in terms of just the valuation on this company right now, what your outlook is for the full of 2024, that's kind of what I want to hear next. So what do you think of as potentially a realistic outcome for Q1 for Robinhood?
Yeah, as far as share price or
Well, in terms of triple beats, do you think
okay.
that they're going to blow everyone's expectations away with their crypto volume or options volume, these sorts of things? Because I think the stock is kind of reflecting that there's going to be a massive Q1. Quarter hasn't even finished yet, but people are getting quite excited.
Yeah, I mean, so on paper, you realize this company has no debt and they have about 7 billion in cash or cash-like assets. So they're worth 7 billion right there as far as their market cap. So when you're looking at, I would say they're not overvalued at all, and there is certainly quite a bit priced in. Unique to Robinhood and this kind of company, they actually come out with monthly data, and so they'll have a data dump for February that's coming out middle of this next week. Usually Wednesday. It's maybe a little bit later if it's an earnings.
I think it's March 13th this time.
Yeah, I believe that's what I had. Is that Wednesday? Yeah, that's Wednesday. That's what I'm expecting. It could be the 14th, but most likely the 13th.
It's scheduled. They
Oh,
have
it
it
is?
scheduled.
Okay.
Yeah.
All right, perfect. Well, even better. I was looking at the historical stuff, and I didn't see that. But that helps me out. So, but
4:05 p.m.
yeah, well, yeah, I know it's after hours,
Yeah, yeah.
right at the same time every single time. So, but that every single time that they've released these, in what they've teased with the Morgan Stanley conference, it's going to be a triple beat quarter 1. I don't see any way that it won't. Like not knowing the last 20, 21, 22 days of this month, it doesn't matter at this point. It just the volumes are increasing, monthly active users are increasing, gold users are increasing. They're so busy as far as handling people's transfer of funds to Robinhood that they're like, hey, if you miss your appointment, it may be 2 or 3 weeks before we can get back to you. So do not miss this appointment. And there's just really not a lot of. They've been very cost conscious. And so I know that there's some spending on marketing and that sort of thing, but it's paying off big time. Even their cost of acquisition was much, much lower than I expected back in quarter 4. So they're not just going to have a triple beat. They're going to smash, absolutely smash through that. They'll raise guidance. This stock, my guess back in December, this is before we had quarter 4 numbers, before we saw the Bitcoin do what it was, is I was thinking that 26 was a base case at the end of the year for Robinhood. And that was when the stock was back like at 12, 13, something like that. I just saw these confluences lining up. And I still think that. I think that there's a very, anything could happen. There's no guarantees, but I think it's extremely likely that Robinhood hits 26 just based on the growth, the money that they're absolutely raking in, and
Wow.
being very cost conscious. There might even be some acquisitions, but you look at the recent ones, X1 credit card, like they're making money off of that already. They're doing a relaunch of it later this month. It's a smart, well-run company that ships products well, that's expanding overseas. That pretty much every single thing is lining up perfectly for them. Will there be missteps along the way? Absolutely, but yeah, I'm very excited. I've trimmed a little bit of my position because when you're up like a 4x, it's good to take some gains and profits. Even if I'm like, hey, I'm like 90% certain this thing is going to keep going up. We could have a market pullback. I might be able to buy in, but for the most part, I'm just letting things ride. I'll have those long-term gains here in a couple of months that I can start to take. But I'm going to be holding for a while, and even looking just with what they're doing with the retirement aspect and the gig economy that they're going after that really no one else is. It's like, dude, there is a long-term case here. I'm not ready to buy in for that yet as far as shares. I just hold the leaps. Maybe I'll convert some leaps. Maybe I'll buy some shares. Right now, probably if I had to choose, I'd just say, hey, I'm going to take my gains and go. But it depends what this stock does. I'm very excited with its near-term future. I think far-term, it's going to be awesome too. But well run.
Yeah, I mean, we have to think like the one thing Robinhood has consistently done is take market share from their competitors, and that's because they consistently make a very, very good product. And I'm really surprised by that, honestly. I thought that, years ago, as they, developed, zero commission trading and these sorts of things, that there was going to be this crazy rush of competitors that come in and do the exact same thing.
Mm-hmm.
And that did happen.
Oh, yeah.
But consistently over and over, Robinhood makes the newest and best product that comes out. So if you want first access to these new tools, then there's only real one place that you should be. And especially now with the addition of retirement accounts and now the gold subscriptions, the credit cards, the 5% in, on the actual amount to have your cash just make money just sitting there. You have the ability to spend, save, and invest, which is for the most part the bulk of what just everyone wants to do. So it is getting to a place where it's changing the thesis. It's becoming less of a brokerage and more of a full management or full money management place
Yes.
that has some pretty unique features and cheap commissions.
The thing that really got my focus as far as a long-term possible play was they did, recap of everything that they launched throughout the year. And of course, the timeline of Robinhood. People say, oh, there's no moat. And I think sometimes the moat argument is overrated, especially with a company like this. But people are like, oh, yeah, they'll just copy Robinhood and there'll be others that offer 24-hour trading and that'll have like the gold features and stuff. It's like, yeah, that takes time. B, it needs to be done with excellence. Not every company can do that. I mean, we invest in SoFi and their best platforms, all right, but it's not there yet. And C, Robinhood is not sitting still. They continue to innovate, and so it's like running a race. They have the gigantic lead. It's like, well, yeah, if Robinhood lays down on the ground right there and takes a nap, then other people will catch up. Yes, but they are not napping, brother.
They're not wanting
They're
to do
not.
that. They're not wanting to do that.
Yeah.
Do you want to switch over to our next topic of discussion?
Man, I want to. I want to hear more about Nubank. I got some questions.
Nubank. Okay, so unlike Robinhood, which potentially most U.S. investors will have heard of, Nubank's a little bit different. This is a Latin American, a full bank. Okay, wait. Let me see if they have a slide with all of their products. If I don't find it immediately, which is seeming to be the case, here it is. So they have checking and savings accounts, credit cards, lending services, invest products, business accounts. They have insurance policies. They have crypto. They have a bunch of things. Yeah, a full service bank that, if you guys saw, let me go back up to the top here, has an unbelievable amount of users, nearly 90. Well, it's already past 95 million in January. So we're actually probably going to pass that 100 million mark just at the beginning of Q2 if things are on pace. They have 53% of adult population in Brazil. 83% of this total 95 million users continue to show up to use the app on a monthly basis. It's an unbelievable growth story. The earnings, the net income, the gross profits, the revenues, the customers, they're all compounding at great rates. What are your questions there, Roy?
So one is one of the things that impresses me is just how significant they've embedded themselves in Brazil. They're a Brazilian company, so it's settled by the Portuguese. So Portuguese language, a little bit different culture, but they're vectoring out into Latin America. So they have 53% of the population of Brazil right now. Realistically, like, are you seeing? So Mexico is like the next big market. It seems like that they're focusing on. It's very different. Are you seeing any risks as far as or any issues as far as their deployment within Mexico that they're facing so far?
So yes, it's I don't want there to be a slowdown in their growth in Mexico. However, the deployment into Mexico has been much faster in the first 24 months than it was in Brazil's first 24 months. So every new geography that they've entered, so it's not just Brazil and Mexico, it's also Colombia. Every geography that they've entered, Colombia being the last, has been faster than the last. With Mexico, they said there is a less population and a much higher percentage of people, roughly 60% of people, that are currently unbanked.
Yeah.
Meaning they don't have a relationship with any real banking institution. Not even, so underbanked would be no credit products. Unbanked is no checking products. It's no, like, you're keeping your cash under your mattress, essentially. And so breaking into that market may seem to be a hard situation to do, but Nubank is being well received so far. The only concern is that the first people that are entering are usually the tech forward, innovative style people. It's getting the other half, the side that potentially is a little bit reluctant to want to try those services. But I'm a huge believer in the team, and there's a whole bunch of stats that we can go through. Like, one, they said 42% of their total headcount is working on moonshot activities, meaning they are putting almost half of their headcount towards things like working on Mexico, working on Colombia, working on products that haven't been delivered yet. They are so growth focused that, just like Robinhood, there's not a chance that they're going to stay stagnant or even lose their market share, because they are consistently looking for where are we going to be in the next 10, 20 years. So to answer your question, I got a little bit off pace. It's hard for me to know whether they're going to fall behind in Mexico. Their unbelievable deployment into that country does not make me think that they're going to be slowing down. And it's not like they even had a strength in Brazil to begin with. David Velez, the CEO, is not a Brazilian.
Yep.
He does not speak Portuguese. He's not a banker, and he's not a tech engineer. Okay? he went into an industry that was the hardest for him to enter. He does not know the area at all, but he knew that that was the biggest challenge that he could tackle. Now, he's a venture capitalist, and so he was well tied to a lot of capital and knew the people that were going to get him there. But that's the same person that's going to help him figure out the challenge in Mexico as well. So I just have a big belief in the management, similarly to other companies that we like to have in common, like SoFi, for example. But
Yeah, we looked at the management and as far as the workplace culture of Nubank, and it seems like that they have a good culture. That they're a talent magnet there as well. They've done incredibly well in Brazil. Like nobody expected this. I don't probably not even Nubank, maybe, but and then the other thing that's really neat.
He did not think that this would happen. He said there's a quote for him that said, if I knew that we had 5% of the total population back whenever I started in 2013, he said I would have freaked out. Yeah. Knowing that he has 53% of the total population is a completely different story.
It's a bit unprecedented, and just the way that they're compensated, like just him foregoing, some of the SBC, and they're not like a U.S. company where it's heavy SBC. That's like, yeah, free cash flow. Well, it's a bank, so you don't look at free cash flow, but you know what I'm saying. It's very interesting play to me. And the other thing that you mentioned, just Latin America, I think will do incredibly well just because of nearshoring over the next decade or two. I don't see a way that, there's geopolitics, there's issues there, certainly there's risks. And that's what I wanted to ask you about is I think the economies will do quite well. But it's hard for me just because it's hard for me to think outside of the American box, the United States box, where I'm like, I understand the credit risk and what the consumers are and the way that Americans will spend on these products. I know there's not a lot of credit type products, especially in Mexico, but how do you assess like the credit risk? Because this is not just a bank they're going after, for the underbanked as well that don't have any credit and developing that. There seems to be a risk there just because this is a big unknown. It's a big question mark. So what are you seeing from Nubank that kind of mitigates some of the risk, if anything, or how do you balance that when you're thinking of your investment philosophy?
So whenever Nubank first started, they were a credit card company and actually hired a lot of people from Capital One. And so the Capital One formula kind of solved the Latin American market, essentially going after people who have no credit history. How do you underwrite someone with no history? And so what they ended up doing is they went in and they said, okay, we'll give you a limit of 200 Brazilian real, right? Or reais. That's essentially $40 roughly. And saying that's your credit card limit. Now you pull out a credit card, some new people in the United States might be given a $2,000, $4,000, $6,000 credit limit. Giving a $40 credit limit is extremely low. Let's see if you pay back. And in the first month is where they see their highest default rates, potentially up to 15%, right? And then they just stop dealing with those customers. Oh, you weren't trustworthy. You know what? We maybe in the future will give you a checking account, a prepaid card, work back that relationship. But for now, the people that will continuously pay back that $40 get $60, get $80, get $120. And what they realized is that people are actually pretty trustworthy and that you can almost make your own FICO score in a sense. Yeah. That they, especially whenever dealing with more and more data, you have 95 million users, you're running on your own scores, your own essential models, right? So for Mexico, they're kind of having to restart all of that. But going back to the same playbook that seemingly worked for Capital One in America, worked for Nubank in Brazil, and now taking a lot of that same Brazilian Nubank learnings to Mexico and Colombia to say, hey, we'll give you a small credit limit and trust that you'll pay us back. And if you don't, it's not a big burn because the people who are paying us back will have 100, 1000x the credit limit that potentially these new users would have.
Yeah.
And what you end up finding too is that because this product is so beneficial after a while, that people are getting a service that they were not trusted with from any other institution.
Yeah,
and so they tell their friends and they tell their family. And that's sort of the key part to Nubank as well, is how much money they make versus how much they have to acquire a new customer, which is globally the best statistic that they have versus any other fintech. Yeah, their customer acquisition cost is bottomed out and their average revenue per user is climbing and fast.
Yeah, this is one of those cases where it's not them incentivizing people. There is some of that to use a product. It's so good, people want the product, so they're going
Yeah.
after the product. That's an amazing scenario. I had a question on Pix as well. Pix is, of course, the government solution, the real time payment solution for Brazil. It
Yeah.
basically drove out and killed off most of the payment service providers in Brazil. It's not a bank. It doesn't replace the bank, but I'm just kind of curious on Nubank's relationship with Pix, and is if Pix pivots, or if there's like a nationalization effort, which sometimes happens in Latin America, where they take a company and they just say, "Hey, we're just going to nationalize this." Is there any kind of risk of Pix or nationalization of Nubank as a bank of Brazil?
Um, I don't even know if I understand the question of the nationalization part. What do
Basically,
you mean in that sense?
so Brazil, I don't understand the politics, fully,
Okay.
but I know the history under Bolivar of South America is that there's the governments are not always stable. Like they can rapidly pivot from full blown capitalization, and I can't think. So capitalism to just laissez-faire, leave it alone, let people do what they want, to dictatorship, to socialism. And in some of those socialistic threats, you saw it in Venezuela. The government comes in, they take over banana plantations or oil companies. It may be a little bit harder to do that with a software company, a bank, but that has certainly been done in the past. I
Mhm.
don't know that Brazil has that risk, but do you see that as is that like a risk that you factor in, or you're just like it's so unlikely that I'm not even going to think about or worry about that?
I mean, so I do think of it in a way. I just also think that whenever I think that potentially people worry about this runaway inflation or something like this. But from what I've seen, that the credit cards and such, they don't really have a problem in that sort of situation, right? Like, what's the worst that can happen is that inflation runs amok, and then people pay back their debts because they can afford it, and potentially the dollars that you would receive would be worse than what you had offered them out as. But that's not necessarily, the absolute worst option, but yet that would be the worst case scenario.
Most
So
realistic worst, yeah.
so um, you look at Mercado Pago, they're doing fantastically well in even places like Argentina, where this has been a serious problem. Now, Nubank was smart enough to realize, hey, they were going to join Argentina in 2019. They said, we're not going to deal with that. But I think they're monitoring the situation much closer than I could ever.
Yeah.
And to that, maybe I'm just offering a lot of trust, but uh, the trust is backed on a relationship that has delivered, one of the most spectacular companies over the last 10 years. So if things start to degrade, that's sort of where I'm finding a margin of safety. There obviously could be things that go wrong, but in terms of picks in the relationship to that, if I could go on to that, would be essentially, yeah, you summed it up. It's the Fed now of Brazil. It is by far the fastest adopted instant payment platform than anything else. Okay, it just allows users to transfer from bank to bank or user to user instantaneously, and that charges a fee to the institution that's charging it. So it's free to the user, but not necessarily to the bank. So Nubank actually ends up fronting that cost. Nubank is the number one institution that uses Pix the most.
Yeah.
Okay, they almost do 30% of the entire Pix network's worth of transactions.
It's amazing.
Nubank's like actual banking license had come from and sponsored by the Central Bank of Brazil, the same people that are dealing in Pix. I honestly think that there's a strong relationship where they are almost incentivized to use Pix,
Yeah.
and with that potentially could give them some I don't want to say political power, but that's kind of how I'm feeling. Like it gives them good standing with regulators, and so they're offering these most modern solutions.
Yeah.
And uh, Nubank is willing to front a lot of costs with things like Pix to allow for more people to sort of do what Robinhood's doing, get a higher percentage of wallet and make money where there's a clear sort of trade-off, like a personal loan, right? No matter how much AI sort of comes in, or other instant payment solutions, personal loans are always going to have interest on money accrued over time. And so that is something that I think that they're sort of, I guess, I don't know, future proofed in a way. But yeah, I don't worry about picks. I actually think it's a strength to Nubank. It might be a problem to the payment providers,
Yeah.
but not to the banks that actually own the user.
Yeah, that's what it seemed like to me. Now, the one thing that's holding me back, I mean, there's two things. One is I'm focused on other positions that I think are undervalued and filling those out the first half of the year. But Nubank is the top of this very small list that I have of companies that I'd like to start a position in this year. I'll probably pick one or two. If I had to pick today, it would be Nubank. Every time I look at Nubank, like, the stock just goes up, and so in some metrics, it looks a bit overvalued, a bit pricey, and I'm like, oh man, maybe I could wait for it to fall and get a better trade. Maybe I could, but if you didn't, so what do you think about the valuation where it's at right now? And then also, if you didn't have a position in Nubank at all, but you knew all your information, like right now, would it be a company that you would be investing in at this current price?
So I haven't been buying in the $11 ranges, but unlike some other companies that I talk about and I love, that I'm holding and haven't been buying for an extremely long period of time, I still have been buying Nubank in a relatively short, or like recently, what I'm trying to say. In
English.
terms of the actual PE ratios and the PEG ratios for this company, I think people get a little lost in the numbers. So a couple of years ago, because they are just really have, I think it's 5 or 6 quarters of net income profitability, right? Before that, they were a negative company. And they actually said they'll probably get back to a point where net income is negative again, because they're so focused on future growth. They're not just trying to make a strong balance sheet. However, with high interest rates, it just happened to be that they have some really unique opportunities to just make a crap ton of money. With that being said, earlier, whenever I was looking at this company, it was at like $6 ranges. And I mean, whenever I was first talking about this company, it was in the $3 ranges. Now it's at 11. But at the $6 ranges, I was getting all these comments on the YouTube channel saying this company's at a 500 PE. How could it possibly go up? Well, now it's at $11 and the PE ratio is about 50.
Yeah.
Right. So it depends on the growth rate, not on what you're actually seeing today. And that's going to continue going forward. So although they have a 50 PE ratio, whenever you actually extrapolate that out and look at not even what potentially Nubank is thinking for their growth, but what analysts are thinking. So I'm just taking the average amount for analysts over the next 3 to 4 years for Nubank. Okay. And taking the growth rates, which historically Nubank has beaten. Looking at, or even in the most recent quarter, they revised their earnings on the upside 4 separate times in the last 3 months. So these will probably, if I believe so, will continue to get revised to the upside. But even that being said, the PEG ratio would be at a 0.85 times.
That's good.
So they're going to reduce their price to earnings ratio over the next potential 3 years, if the price stays the same, from 50 times to 0.85 times.
That's the PEG is 50 times, or the PE?
Sorry, the PE is 50. The PEG is 0.85. Okay. Which anything under 1 times, if, as Peter Lynch would say, is considered an undervalued company. The bigger that spread that you can make, the more obviously margin of safety that you potentially could have. And where people might get a little bit lost, and we'll talk about another company that has an extremely low PEG ratio in about a minute here, is, buying a company, but yet potentially they could lose their moat. Now, I don't think that's what's going to happen for the company that we'll talk about in a minute, but with Nubank, literally, what competition do they fear? That's the real question. Because for other companies that have really low PEG ratios, you could point to a bunch while saying, hey, this one is also taking great market share. And these ones are really the incumbent players that if they came down, they would squash them. People are talking about this with Mercado Libre versus Amazon. If Amazon really started to try to develop in Latin America even deeper, like sink their claws in, maybe Mercado Libre wouldn't be as needed, right? With Nubank, who's going to come down? JP Morgan? Like, who is... even people will say, oh, well, SoFi is going to try to enter Latin America. I mean, guys, I love SoFi too. They would get destroyed. Nubank is a one of one.
Yeah. I see them as a JP Morgan Chase, like 5 years after JP Morgan Chase went public. It just well executed. They're offering a better product. They have unique ties. I'm excited. I would like single digits is all I'm saying. I don't know if I'll get it. So
I think that this will be $100 billion company in probably the next year and a half. I don't think that it's going to be slowing down. And that's the craziest thing, is that if they can show the growth and the stickiness in these three other geographies, it's over. They will understand the localization and spread to Peru and Chile and Argentina and all of these things. And now that Argentina actually has their new president there, they actually talked about re-entering Argentina now. So
it's exciting.
Good luck to the incumbents there.
Awesome.
Next, PayPal.
Yeah.
Roy, this is one that you have deep dived into and really made a name for yourself covering this company.
Yep.
What's going on with PayPal?
Or ruin my name with it. We'll see how that. No, not really. But no, they it's been an interesting week. So I've been this week just with the stocks that I cover. There's just been, like we talked about Robinhood already. SoFi, we didn't talk about it here, but there was a lot of SoFi interested news, just big items. And of course, Palantir just had crazy amount of stuff happening this week too. And kind of lost in the shuffle for me was PayPal. So I was so focused on what was happening over there that, day by day, I would see little articles or little notes and be like, okay, yeah, PayPal's doing a few things here and there. That's cool. And then I decided on Friday to do a recap. And I went through a post and I went through every single thing. And so PayPal under Dan Schulbit had a reputation of lagging in innovation, and they lagged in implementation. So they would maybe innovate and have a new product, and they'd be like, hey, we're going to release that. It's kind of like if you have a kid and you're like, hey, can you take out the garbage? You're like, sure, I'll take it out in 3 months. It's like, okay, well, what freaking good does that do me? Like, that's terrible.
Yeah,
that's cancel. So, and again, like you look at the opportunities they had, and they would just squander it. They would sit on their hands, they would wait, or they'd go after they would kind of forget what they were doing and be like, hey, we're doing really well in here. Let's focus on this instead. Alex Chris is really reining that back in. So starting on Monday, there was a Morgan Stanley conference that he was a part of. We talked for maybe 20 minutes or so. So a lot of it was just already known. He's talking more about first look products. There was 3 things in particular I thought were interesting, but the biggest one, really the only one that I wanted to focus on was he has driven this message home. Starting in Q3 earnings when he first had that presentation, Q4 earnings, he reiterated this. Everything he said is reiterated this, that they were looking to drive profitable margin expansion. And so he said something that this is the first time he phrased it this way, that through this year that they're looking to do that. And if at the end of this year, this is paraphrase, if at the end of this year, something is not driving profitable margin expansion, there's no reason that they need to be doing that. So we talked about divestment. Yeah. If there's a product or something that they acquired that it's not doing it for them, they can just say, okay, we're going to get rid of that. We're going to sell it. We're do whatever we need with that. We're going to really focus on what is driving profitable margin expansion. So those are music to an investor's ears. It got no attention by anybody in the media. I didn't even write much on it. I was busy week, so just one post.
You're part of the problem.
Yeah, but they didn't stop there. Like if that was Monday, it's like, yeah, it's a normal week, actually better than average week for PayPal as far as a company, because it just reiterates that focus. And then every single week, it was like, hey, we've now launched. You had these 7 products from First Look that was mentioned back in January. It was the Shock the World event, if people remember. That was the first look at products that will shock the world over time, not a one-day event. But anyway,
Yep.
probably
Yep.
could have been rephrased a little bit better. But regardless, if this was Dan Schulman's PayPal, it would have been like, these are the products that'll shock the world over the next decade. Maybe we'll roll it out, and just do like a little bit here. It's like, oh, what are you doing?
Yeah.
He said, end of the year, these will all be launched, and that they were, they guided very conservatively in Q4 just because they're like, we don't, we want to have a good gauge on how these will impact the bottom line before we promise that. So people were not pleased. Q4, I had some issues with it. It's my
I wasn't pleased.
still. Yeah, as a shareholder, I was like, you need to do better next time. Come on,
Yeah.
buddy.
I didn't think that it was the time to sandbag at all.
But so they launched biometrics. This is not in the United States yet. It's overseas. It's kind of interesting that they're doing the reverse of the normal. They have a huge European presence. And so I had some people tell me, I was like, hey, I was able to use biometrics for the first time with PayPal. Just scan my face and then pay. It's like, that's cool. That's a feature that Apple Pay has and some others have. But just because somebody else does it doesn't mean that you shouldn't. PayPal almost like in the past, they're like, Apple Pay's covering it. Maybe in 6 years we'll catch up.
Yeah.
Chris is like, we need to do this today, now.
Yeah.
Fastlane was another one of those that was promised. This is the guest checkout that really drives the cart conversion. And so when First Look rolled out, they mentioned with their partnership with BigCommerce that there was cart conversion rates of up to 70%, which means that you put something in the cart, 70% of those people actually pay for it. Oftentimes, if you have to go search for a password or log in or get your credit card out, you just don't follow through. So normal conversion rates are like 40, 45%, depends on a lot of factors. And Chris mentioned that they're as high now as 80%. That's not all the time, but the more conversion you have, the more actual sales you have, the more money you make, the more money your merchants make, the more likely they are to continue to use their products.
Exactly.
So I had somebody, it's actually several somebodies tell me about the Fastlane, that they were able to use it again overseas, not in the United States. It's like, why are we second? We're always supposed to be first. Canada can be last, and then Europe can be like in the middle. But no, they had screenshots that show the process. There's a little bit that they need to tweak there, but it's so much more improved. They have tap to pay that they rolled out as well, so you can take your phone as a vendor, if you're using an iPhone, and you just click, and then the other person taps their credit card on it, boom, you pay. Again, it's an Apple Pay thing that they're actually able to use that, and several other products as well. It's like they had more innovation rolling out in this week than perhaps the last year. And I hadn't even talked about what happened on Friday. We'll save that. But it's like, this is a completely different company under Alex Chris. The stock market doesn't realize it yet, but he is an operator. He drives results. He does not mess around. You see what he did with Intuit. And I don't know, when the stock will show it. We need to actually see results. And I think the market is at a show me state. But my goodness, he is not just empty talk or like, hey, maybe in 6 years we'll get to it.
Well, so even I want to clarify a couple things that I really want highlighted here. So one, the Q4 numbers that came out that during the call that I was displeased with, the actual quarter numbers were great.
Yes.
They inflected on transaction margin. A lot of people didn't think that was going to happen. They inflected on credit loss transaction rates, on operating margin. There was a whole bunch of different of these statistics that not only on a dollar basis, but on a percentage basis actually started to turn around, that were persistently decreasing.
Yeah.
Which very exciting, right? That can, you can start to extrapolate out like, okay, well now if TPV is going to continue to climb, total payment volume, and we have these better numbers starting to increase on margin, that's where you can really take some more profits to the bottom line. So the actual numbers were great. It was just some of the moves that management made. And now Alex Chris is trying to justify some of those moves, saying, hey, you know what? We've replaced 80% of the executive team. We need to get a win under our belt. And so we're kind of guiding low. I can see that. I can see that as well. But yeah, I'm hoping that they continue to revise each quarter saying, hey, we're getting better than expected numbers. We're getting better than expected numbers, sort of like SoFi. And then by the time the year actually ends, you've doubled what your expected growth rates were. So that can be a possibility. Very excited about that. I wanted to touch on one of the other 6 of the innovations that I think is very exciting.
Sure.
and it might not be the one that you're thinking of, but it's very cool in my opinion, is smart receipts.
That's what I was thinking of.
Okay.
Yeah. No, I'm so amazing, dude. Go.
So even as a creator, like creating content on YouTube, brands will reach out and they'll say, hey, if you like our product, try it out. And then if you're comfortable promoting it, we'll give you a commission based on whatever you convert from a user to a buying customer. And depending on the product, it can range as high as, and I'm not joking, 100% of the profit goes to the creator, which I've done a deal like that. It does exist. To 30% or 10% or something like this. It's usually not much lower than 10%.
Yeah.
Okay. Where on the other side, whenever you're talking about promoting something that may not close a conversion, the rates get much, much lower, right? Because there's not a guaranteed payout. But whenever you're talking about a conversion rate, it's very high.
Yeah.
And now you're talking about a direct relationship, not with creator to one specific brand, but all brands working with one specific platform. And that's specifically very cool because they could say, hey, we're going to charge you essentially to do Facebook ads, but you're only going to pay, not Facebook ads, but PayPal ads. You're only going to pay if the people actually check out and buy the thing that you're promoting. And so you can charge a very high rate, and it's at no extra cost to PayPal to just slap on an additional advertisement on other people's receipts.
And that doesn't sound like on the surface, you're like, who checks their receipt? I don't remember the exact statistics, but
I think it's 45%.
Yeah, 40 is in the 40s, and just 45% is just like, I mean, I even started checking my PayPal receipt just because I'm like, I want to see this smart receipt. But the best thing about it is, I mean, most ad is just like you mentioned, it's like you're paying for eyeballs on the product, whether they buy or not. So this is like at no risk for the merchant at all. They just say, okay, go ahead and do this PayPal. PayPal knows the merchant. They know the products that other people are buying that are similar to this person's profile. They know what you, the individual, bought recently. They know what somebody that bought that recently might also buy. And so they could just easily attach that. And they know that. So this person is like, okay, I know PayPal. I know the merchant. I know the products. I know what I just bought. And you can just click that button and be like, all right, I'm going to go ahead and buy that too. That's a great idea. It will
I think you're missing. I think you're missing an important point, though, is that it's also not only is it no risk to the merchant, it's no risk to PayPal.
Yes.
Like to add this feature on, even if it's 10% of people are checking the receipts, this is not costing them anything.
Nothing. Yeah.
So it's added revenue with tools that you already had in the toolbox.
And they've not launched it yet. I've not seen any that. It seems to me that it would be pretty easy to implement once they have enough merchants actually on board. So they're working on that. I'm sure. I know it's going to launch this year. I think we'll see it sooner than later. It's not hard to program in or anything like that. It's genius actually, and it's one of 3 advertising type products, but it's the one I'm most excited about actually.
Yeah. So, but in the most recent news, there have been some pieces that have come out that have been quite exciting, knowing that PayPal is actually starting to deliver products. Do you want to go straight into the most recent one, or do you want to touch on some of the smaller ones?
No, let's go straight into that. I mean,
Let's go straight in.
People can look at my post. You had a stream, I think, a couple of days ago too, that went through and kind of showed the innovation. They're not standing still, but the biggest thing is I rolled out this recap on Friday. I'm like, and that's just so far this week. And I was thinking, it's Friday. They're probably not going to have anything big. They had the best one for last. And so Pay8USD was launched. That's a stablecoin back in August without much fanfare. People are like, oh, they've got a stablecoin. That's cool. The idea of the stablecoin is not to be a USDT or USDC where you make a lot of your money while there's unusually high interest rates, and then maybe after that, not much money. I mean, there'll be some Web3 adoption. They've had a little bit of issue with that over the last 2 weeks. Won't go into that here. But the biggest thing is, and they've always said this, is they want to be the company that connects regular consumers and merchants using a stablecoin. The reason why that's so beneficial for PayPal is that they don't own their own payment rails. They're not an agent that they do that. And so that when they have transactions go through, they have to pay somebody else because they're using somebody else's payment rails. With PayUSD, they own their own rails. They're digital. There's almost no cost, if not no cost at all. It's instant, it's programmable, and it's a prudentially regulated stablecoin. That's one of three. It's very unique. It's issued by Paxos. The news this Friday was, and I was thinking that this might be like towards the end of the year 2024, just because they've not talked much about it. There's no mention at earnings calls, no mention at Morgan Stanley, but they're like, hey, guess what? In the next few weeks, we will be launching with our Zoom product, which is those peer-to-peer transactions internationally, the ability to use PayUSD at no fees at all. All you do is you pay a conversion cost. That's the guy that's the architect of PayUSD. He has strong relationship with Paxos as well. I'm hoping to interview him. We'll see if that works out.
Let's see.
But no, I like looking at it, and I'll just share real quick my screen here. Entire screen. There we go. So the biggest competitor, from what I understand, and there's much I don't understand here, is Wise. And so Wise is here on the left, and then this is showing Zoom, but without the actual PayUSD. It's not launched yet, but it's in the next few weeks. If you look at it, so typically Wise has lower fees, lower rates. It has a great user interface. Zoom's good too, but a lot more people use Wise. Zoom's been kind of lagging. Using PayUSD now, they can offer it without fees. All there is there's conversion. So if we hit show fees here, we can see that there's fees depending on what they're actually using. PayUSD will also be here at 0. The biggest differentiator is that these require usually settled funds. And if you look at Wise, they have kind of the same breakdown, that if it's on Wise's wallet itself and they're settled funds, or it's you're using your own bank account, then it's lower fees versus if you're using credit cards. So they make some extra money as well if there's a cash pickup, if bank deposits, perhaps if it's credit or debit, but not PayUSD. And so but the way that PayPal will be making their money is through this conversion fee. They said that's basically it, unless you're doing that, just picking up cash. And so if you look here, like I did this earlier today, and I'm sure the rate has changed. They show what the rate is here, 1 USD to 0.8945 euros, versus the rate here for Wise, which is just a little bit better. So, 9.14. And this was a little bit earlier, so I think the rate has maybe gone up slightly. So the way, I think the easiest way to think of this is it's a bit like a payment for order flow for Robinhood, that on the front end, you're not paying any fees at all using PayUSD. Settled or unsettled funds, doesn't matter. They just do it. There's really no cost to PayPal because they're using the stable coin. They don't have to do the FX hedging like you typically do for these sort of transactions. They don't have to pay using somebody else's payment rail. And it's instant. Like there's no waiting around, versus like if you're trying to send money from Wise on UK, they have, and it depends on the company, but it's like they have like super fast instant transaction, and you pay a lot higher, or you have a lot less of a conversion rate there for the rates, versus like, hey, if it settles in a few days, great, it'll be very, very low for you. PayPal is like, hey, it can settle like now, instantly, within seconds. So a little bit worse on the conversion rate, but there's no fees. And I was comparing these two, and I'll do a post on it later this week. In most instances, the rates overall, if you take this into consideration, what people are actually receiving, favors PayPal. Now, the one I'm showing does not, but for the most part, it does. It depends on the transfer rate, depends on the company.
So,
yes,
Roy. So, if you look at the Zoom thing, if we're just sending US dollars globally to someone else that's accepting US dollars, there's still a transaction fee. Yep. Right? Like in the underneath where it says the conversion rate, it says, in addition to the transaction fee, we also make money when we change your send currency into a different currency. Right. That is really where, in the simplest form, they're just going to be able to remove that. There's not going to be a transaction fee. And the reason why they're able to do that is because this is not their only form of payment. Like, they actually are going to be taking there will be a very, very slight fee just for the blockchain, just to actually incentivize this payment to go through and be verified for PayPal USD, but they're willing to cover it, so then you just use their entire PayPal service more often. It's the same reason why I think that PayPal, for buy now, pay later is best in their pockets because they can charge the lowest rates because they don't need it as the standalone product. And now they're going after Wise because they don't need uh remittance payments or the transaction fee for remittance payments to be the only source of income for them. And so they're really starting, and hopefully, to bully some of these smaller players around just because of their sheer scale.
Yeah, that's a main piece of it. And the other piece is the unsettled. That if you have funds that have not fully settled in whatever account that you're using, it's difficult and much more expensive no matter what servers you're using. PayUSD, they're like, hey, we don't care. Boom, instant settlement. Um, and their goal with this, so they're starting off with this. Jose Fernandez de Ponte mentioned, that they're actually moving on to the merchant side, or to some of their vendors rather, after that. So that's coming relatively soon. And
That's
then
gonna be so cool.
David Weber, who works alongside with that, he is the head of institutional markets with them, and works with PayUSD. There's this post that I found of his back in January. He said, and this is just said very nicely, long term, we think PayUSD becomes the means of exchange on PayPal and all its brands, including Braintree, Honey, and Zoom. Short term, we're seeing a lot of demand to hold PayUSD in Web3 and that DeFi, because we are by far the best place for retail to off ramp to fiat. So this is not really about Web3. Like, they'll have some benefit from that, but it's really about just being that means of exchange within the PayPal ecosystem. It's their own digital payment rails, and if there's wide scale adoption, and they have so many people that use PayPal on a regular basis, it is a significant boost to margins for PayPal. More people will be using it, so it helps top line and bottom line. It's a long term play, but maybe not as long as I was thinking, because they announced this on Friday.
So I'm gonna try to find. Actually, I won't be able to find it in time, but there was a really cool comment that Dan Schulman made about a month before he left, talking about how he believes that PayPal USD will be the biggest product that he had been a part in developing, and that it'll save them about 1/100th the cost to send money as it did before. And this is just going to completely change the landscape for payments.
Yeah, it's amazing, dude. And it's not guaranteed at all. It's still tough just because regulatory environment, but PayPal works. It has when they were first launched, they did not work well with regulators at all. Now they do. They're a global company. They work maybe too well with regulators sometime, but they're able to do that where other companies really struggle. They have that massive 400 million user base, 430 million, just under user base of consumers, merchants as well. Just they're uniquely positioned that if a stable coin enters mainstream economies in this decade, it's going to be PayUSD. It's not going to be Tether. It's not going to be USDC or something else that is coming out. It may not happen. I think it's like a 25% chance, but if it does, man, they hugely benefit. That's a long-term play.
If you guys like this sort of thing, make sure you guys give it a like, subscribe down below, and check out Roy on X right there at _Roads.